What is going on, everybody? It's TG back with another video. We are back in New York right now. A little bit change of scenery from what you guys are used to. Big news today overall with the market, especially with BABA in particular. BABA hitting a new 52-week low of $135.21. We're going to go all over all of this and more. What caused this sell-off and what does the future of BABA look like? So we're going to go over all of it and more. If you guys want, hit that subscribe button if you like the videos that I make and want to help support the channel. I have a Discord that's free if you want to join and talk with me and other investors. And again, if you want to support this channel, we have a Patreon link as well. But let's just dive right into it. As you can clearly see, BABA is about $136.68, right by its 52-week low earlier today of $135.21. So it has recovered about 1%, but it's been bad after earnings. It's been really bad. We're talking down almost 20% in the past 5 days, which is just huge for a mega cap tech company, which is not even going to become a mega cap tech company at this rate. What happened, you might ask? Well, nothing much, just a $78,000 fine that will cause the stock to lose tens of billions of dollars in market cap. I mean, it's kind of funny actually how this seems to work. 43 companies in China all got hit with fines of $78,000 each for not properly disclosing acquisitions. It's dated back to 2012. So, I mean, it's not even about the monetary loss with the fines because 78,000 is nothing. I mean, Alibaba has $78 billion in cash just on hand. So that's no issue for them at all. What this does show is that the Chinese regulators are just out of control. The crackdowns are not stopping. They're continuing. Some say getting worse as time goes on. And really what we're seeing here is just a government that is continuing to crack down on the most innovative and successful companies in China. And it's causing them to get absolutely obliterated. I mean, you look at the 1 year now for Alibaba, it's lost half of its value. Half of its value in 1 year. Now, I have a small position in BABA now. It's not as big as it used to be. I used to be deep, like 100K deep into BABA. We had a massive loss where we lost half of our account in BABA. And so I'm never getting super heavy into a foreign company again. I do believe it is extremely undervalued, so I do have a position in it that dates out. The options go out to June of this year. I do think there's going to be some recovery in that. But in an amazing company that continues to grow, 30% year over year, net income down year over year a lot because of these fines, because of these crackdowns, because of reinvesting into their business. So I'm not exactly upset about the net income being lost. What I am a little upset about fundamentally with the company is not even per se the company, but just the GDP growth in China alone, which has significantly slowed down. But I mean, if you look at Alibaba, Alibaba itself has grown a lot. It's still a very cheap company at a 19.3 PE ratio for huge growth of 30% year over year, which is really good. Operating income as well up. But, the problem is these fines and crackdowns make China investing extremely scary and extremely risky. And a lot of people are very worried to invest in China. And for good measure. I mean, for good reasons as well. But, I mean, we're talking at a market cap of $381 billion now. I mean, that is so low for a company that makes so much money. So, I do think this is going to shake out eventually. But that time can be long. So, I always try to urge safety now. I'm not a financial advisor by any means, but I try to urge safety in investing. I've had to learn very costly mistakes, and going long term is definitely the way. It's you're not going to make as much usually, but what you are going to do is protect yourself, reduce risk, reduce exposure, and have more peace of mind, which helps out, less stress, and more protection. Better opportunity to make profit in the end by going longer term, because eventually quality will rise to the top, cream will rise to the top, as they say. If Alibaba's a good company, which we think it is, we look at the fundamentals and then, we see the growth year over year. I mean, we look down here, on an annual basis, that's really good growth year over year. 2017, they're making less than 200 billion. 2021, they're making almost 700 billion. So, company's growing, and if it continues, and these crackdowns slow down or fizzle out, it's going to be a great investment long term. But it all depends really on that. It depends on competition, things like JD. But I mean, really, it's up to them. I mean, it's not up to the company at this point, because the company's been doing things right, but the government hasn't allowed them to thrive. So it'll be really interesting to see. I mean, it's hard to tell, and it's hard to say like, this is a great opportunity to get in. I really like Baidu as well. I think Baidu has kind of trailed similarly to Alibaba. I mean, this was a company that was $358 at one point and is now trading at $140, so $148. So again, like 60-something% off highs. Had great numbers as well. It's hard. And they follow the same pattern. I mean, in the past 5 days, down 13%. Not as bad as Baba, but you're talking about a company that's growing as well. Calling it the next Google, the Chinese Google. So there's a lot of opportunity out there, obviously, but there's also a lot of risk. And if you're willing to hold for the long term, I think you will be rewarded. But don't if you're not willing to hold for at least a year. I don't like the YouTubers that talk about 10-year holdings and stuff like that, because almost every company is going to do good in 10 years. But overall, I think that Baidu is going to be fine, and I think Baba will be fine. But I think the best days of Baba are definitely behind it. And when I say that, I just mean the part where they were the only one in China. There's JD, there's PDD, there's a lot of competition now, and obviously China's big with over 1 billion people, but at the same time, it's also the competition's creeping up and they're gaining traction on them. So yeah, we'll have to see what happens with everything. Interesting day in the market. NASDAQ down 0.4, but Dow up 0.5. S&P obviously always up like always. So yeah, it's going to be interesting to see what happens. But Bob at 52-week lows. So for investors, they're obviously very, very upset, very frustrated, and I could definitely see why, and I feel their pain. So hopefully things turn around for China. The entire Chinese market has just been getting kind of clobbered recently, and President Xi does not seem to want to stop with it at all. Don't ask me why. I have no idea. The internet ETF, KWEB, is down 38% year to date and down 37% in the past year. But it's up to him, honestly, at this point, because these companies are doing fine. These companies are making great profits, great revenue growth year over year. But it's the leader. It's a dictatorship. It's communism. So yeah, we'll just have to see. But anyways, guys, I really appreciate you watching this video. Hope you guys enjoy your day, and I'll talk to you in the next video. Take it easy, guys. Goodbye.